Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with Massar and Matt Miller. Welcome to our audiences across Bloomberg Television, Radio, Bloomberg Originals, and our partnership for those folks streaming on YouTube. Down about 1% on the NASDAQ right now, Carol. 1.5% on the Russell, and pretty much everything else out there, at least on an aggregate index basis, in the red.
Yeah, a lot of areas of the market losing ground today. I've been looking at the leisure sector, hotels, resorts. I think you talked about Carnival earlier, which reports, by the way, on Monday. But if you look at the S&P Super Composite hotels, resorts, and cruise line index, it's down about 1.8%. So, Matt, just off its lows of the days, but there's concerns about the global economy and the economy certainly here in the United States. So recession, no recession, this kind of group and area would certainly see some pressure.
Yeah, for sure. I mean, this kicked off when we got the European flash PMIs this morning that signaled a stall in that economy. Here in America, we're still looking at gaining services, but a real slowdown in manufacturing. As a result, you can see the sell-off, I guess sell-off is the right word, continue, although I'll remind everyone that we're still looking at 4350 on the S&P 500. That's pretty fantastic.
Yeah, and I guess in a reflection of some of those economic concerns taking root, you have the Russell 2000 underperforming all the other major indexes by a lot, 1.5% lower versus, say, 1% down for the NASDAQ and only 0.6% lower for the Dow.
Interesting commentary when you look at the Bank of America fund flows, at least the ones that Michael Hartnett puts out in that note, the idea of maybe a baby bubble that we saw in some of the tech names, some of the outflows coming there. Maybe this is just his profit taking. Maybe it's part of that month end and quarter end rebalancing. I guess we're going to find out in a big way over the next 2 to 3 weeks. As for Friday here, we close out a holiday shortened week, only 4 days of trading, but it is a down week. The Dow Jones Industrial Average down 0.6% on the day. That's roughly about 200 points. The S&P lower by about 33 or 34 points or 0.8% on the day. The NASDAQ down about 1% and the Russell 2000 going to close out the day down about 1.4%. All the major indices in the red on a weekly basis.
Yeah, and on a day when you see the VIX moving up just a hair, about 0.4%, care about it or not, nonetheless, it's still at like 13 and change. It's so low.
Yeah, let's take a look at the breakdown in terms of the industry groups on the S&P 500. You did have this morning tech leading losses. Now it looks like utilities and consumer discretionaries have outpaced those losers. But in terms of gainers, there are none. So all of the industry groups, at least at level 1 on the S&P 500, are down.
All right. And
I just want to point out just one quick thing here, because I was looking at volumes. This was actually going to be a very low volume day here. Right around 3:58, there was a massive spike in a volume coming into this market here. Anyone with a Bloomberg terminal, MVOL USE, type that in on your terminal, and you'll see what I mean. This all came in really about the last 2 minutes of trading, and it actually accounted for something like about 40% of the daily volume just in the last couple minutes. No idea exactly what's behind that, but just pointing out the data. Data dependent, Matt.
That's a lot. I mean, for 40% of the daily volume to come in the last 2 minutes.
A big jump up.
On a Friday, no less.
On a Friday, yeah. It makes, it'll be interesting to see what was behind that.
That's interesting. We see a lot of these big tech stocks obviously selling off, and that's what pulls down the index. I just want to point out something that I heard yesterday from Margie Patel at Allspring that I was talking to Carol about a little bit earlier. She still likes those mega cap tech stocks and says there's momentum there. And remember that Barclays says when the AI names drop, like NVIDIA, which is off 2% today, that's a buying opportunity. At least according to Barclays, they're not overvalued yet.
All right, so let's get to some of the individual gainers. It was kind of slim pickings today, to be quite fair. CarMax, though, we did see it trade top in the S&P 500, also earlier in the day, top in the NASDAQ 100, and this one finishing pretty much at its highs of the session, just off of it, up still 10%, and I think it's the best performing name in the S&P 500 this week, rising after the company reported fiscal first quarter earnings and revenue above the average analyst estimates. It's up roughly about 40% year to date. I should point out about 14% of the float, is shorted. Want to get to Abcam. It's a UK biotech company This was really an outperformer, up about 13% in today's session. The U.S. listed shares here in the U.S. Exchanges. The company saying it's exploring alternatives, including a possible sale, after receiving inquiries from a few parties in recent weeks. ADRs are up about 50% year to date. It's a $5.2 billion market cap company. And then one more, KB Home. Really, the home builders this week were really outperformers. We saw several hitting all-time highs. KB Home hitting a 52-week high today, up about 0.9% in today's trade. And you could see the S&P Home Builders Index up about 7%, 0.7% in today's session. Analysts raising their price targets specifically on KB Home after the company beat on pretty much all metrics for the second quarter and talked about improvement in demand sustained through the second quarter and that it's well positioned to achieve the target for 2023. But again, home builders, Matt, were really a performer, an outperformer throughout the week here.
And you know what? We get new home sales and let's see, some other housing data on Thursday as well. So we'll get more of a read on the housing market overall. We had a day in which more than 3 stocks fell for every one that rose on the New York Stock Exchange. So there are plenty of decliners to choose from. I focused on a couple of AI-themed stocks, which are seeing a pullback overall. But C3 AI in particular, because its investor day failed to impress. Down for a 5th straight day, and analysts are saying that the stock already reflects the tailwinds from generative AI. But the timing of any kind of inflection remains unclear. And you could see Palantir along with NVIDIA, Marvell, Arista Networks, all down. Starbucks losing about 2.5% after 3,000 baristas at 150 plus stores say they plan to strike next week in support of LGBTQ workers. Their union is alleging that store employees were told to remove LGBTQ-themed decorations at stores, and so thus the protest. And Carvana losing about 16%. We talked a little bit earlier about CarMax. CarMax's earnings blew out estimates, and so Carvana, the smaller rival, is sinking today. There are also separate reports of former Carvana employees accusing a contracting company of shady dealings and duplicate invoices and kickbacks. Whatever it is, not great optics for this company.
Let's take a quick look at what's going on in the yield space. There was a lot of activity today and on the week here in the U.S. Looks like the 2-year yield is going to close out the day, close out the week, down by about 5 basis points here, and similar moves across the curve, and similar to the moves that we saw over the last couple of days, not necessarily in direction, but in terms of it being parallel in nature. Of course, the big moves in sovereign debt we actually saw overseas, particularly when it comes to the German bund, the 5-year over there moving about 15, 16 basis points. I want you to flip up the board real quick. I want to go back to what I just brought up here, Matt, about volume here. And I guess I should have known this because I actually interviewed the head of Wilshire just a couple hours ago here about the big rebalancing here of the Russell. Of course, that takes effect right now. So basically the new data is going to be reflected when you come in here on Monday here. But that's a huge spike of volume for our television audience. You can see on the screen that came in really in the last couple days, last couple minutes of trading here. Yep. But there's an interesting question here because I was speaking with Mark Makeby, who heads up the Wilshire indexes, and I was asking him about this idea of concentration risk because there's some concern here that the concentration risk that we've been talking about all year long now gets even greater with this rebalancing, which effectively is now going to favor some of those winners that we've had so far this year.
Yeah, that's interesting. Yeah. I probably should have seen that as well. To be honest, we should have a story, a big, bold story on top when the Russell rebalancing happens, since it's an annual event and it's a major liquidity event. But I have to shout out a thanks to a viewer who sent me a note right after you said that, Romaine. In terms of the concentration risk, there's always the argument that the way a lot of these indexes are weighted, and I'm not sure how the Wilshire works exactly in terms of the mechanics, but the way they're weighted is that you get concentration risk with a bias towards companies that make more and more consistent profits. So if you're worried about it, the argument is that if you did it the other way around, you would have companies that tend to lose a lot of money still equally weighted with those that always make the same amount of a lot of money.
One thing, and that's a good point, Matt. One thing that and this is raising some issues, guys, Carol and Scarlett, is that for the small caps, for the Russell, for example, this actually then biases towards slightly larger cap companies. Obviously, they're still small caps, but the idea is, are we going to end up with indices that are a true reflection of what at least their titles are supposed to be?
Sounds like we need a roundtable on this. Having said that, you saw the headline headline that you guys flashed certainly on TV, but for folks who are listening on radio, the KBW Regional Bank Index, worst week since May 5th, down 7.4% here. So interesting to see the selling that we saw in the regionals.
Well, you did have Janet Yellen repeating that idea that more banks are going to have to merge. She doesn't necessarily see more bank failures, but this idea that there's still too many small banks and they're going to need to team up to get through this difficult period of higher rates.
Jay Powell talking about commercial real estate, which is the cover of Bloomberg Businessweek magazine. I highly recommend everybody talk about it. Just something that we need to be keeping on our radar.
A great read.
All right, that's a wrap. Guys, have a great weekend. That is a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals, Beyond the Bell. Have a good weekend. We will see you same time, actually, at 3 p.m. Wall Street time on Monday.